Taxes are beginning to linger on the crypto space, and it's leaving a foul smell behind it. For today's video, we're going to be doing a guide on everything you need to know to prepare for tax season, as well as an easy and hassle-free way to manage all your trades, gains, and losses in the crypto space. What's going on, guys? Ryan here at the Crypto Fiend Studios, bringing you guys the hottest and latest everything crypto related news. In today's video, we're going to be doing a guide on everything you need to know for tax season and cryptocurrencies. Now, this does only apply for the United States, but if you want to stick around and learn something if you are in another country, you could do so, because this could potentially be happening for your country as well. Now, I know no one likes taxes, and I don't think I know anyone that supports the IRS, but when it comes to taxes and finding the correct information, the littlest misconception can really harm you when it comes to the IRS. So for this video, I made sure I found you guys the most reputable information possible directly from the irs.gov website. Now, every link we view today will be in the description below. I highly suggest that you go view those websites and do more research yourself. Again, before we get into the video, I'm not a financial advisor, I'm not a tax advisor, I'm not a tax accountant. I'm just a guy giving information to all of you to help benefit you on your cryptocurrency journey. Now, there's a lot of speculation going around whether the IRS can even keep track of cryptocurrencies, considering there's dozens of exchanges, thousands of cryptocurrencies, and thousands of wallets to keep track of. But the IRS is really starting to crack down on things. This is an article I found talking about what the IRS is doing to really step in and get their money's worth out of cryptocurrencies. In 2015, only 802 investors declared their Bitcoin-related gains or losses. That's a huge deal, guys. 802 people out of thousands and thousands of people. Now, I know none of us like the IRS. I don't like the IRS. I don't like paying taxes, but it's something that we can't really control. There's nothing we can really do about it unless you want to move out of the country, sadly. So what the IRS is currently doing is the IRS forced Coinbase to hand over 14,000 accounts, the information of 14,000 accounts between the years 2013 and 2015 of accounts that have traded over $20,000 worth of cryptocurrencies in between those years. That's due to, again, tax evasion, so they're really buckling down on those people avoiding taxes and getting the information from those people. They also teamed up with a company called Chainalysis. It's a startup company that offers a powerful toolset that provides the agency with the ability to track, visualize, and analyze Bitcoin transactions. So right now they are mainly focusing on Bitcoin transactions. I don't know what they're doing about Ethereum and Litecoin, but mainly Bitcoin. And also, what are they doing about all those thousands of other cryptocurrencies, as well as all those exchanges and wallets? We don't know. And they could just be saying that they can track everything to scare people. We don't really know, but it's nice to just be on the safe side and know that you filed your taxes, you have everything done, so you don't get a knock at your door that you owe a bunch of money, because that would just suck. So we are going to be looking at the irs.gov PDF for cryptocurrencies, or virtual currencies as they call it. This is going to be everything you need to know to file your taxes and the most commonly asked questions. So I am going to be reading over the majority of this page, but I'm also going to be summarizing a lot of stuff for you guys so you can all understand what they're talking about. So this first paragraph right here, they're talking about what their view is on cryptocurrencies. So the IRS views cryptocurrencies as virtual currencies, as they call it, and it's used to pay for goods or services or held for investments. And then they talk about how virtual currencies is a digital representation of value that functions as a medium of exchange, a unit of account, and or a store of value. Then they go on to talk about how it's not a legal tender status in any jurisdiction. So this means that cryptocurrencies as of right now is not a legal form of currency payment in any country as of right now. Right here, this is talking about how virtual currencies is considered a convertible virtual currency. So that pretty much means that you can convert, for example, Bitcoin into other alternative coins or back into the US dollar, so it's considered a convertible virtual currency. This paragraph right here is talking about that cryptocurrencies can be taxed. So I'm going to read this one because it's very important. In general, the sale or exchange of a convertible virtual currency or the use of convertible virtual currencies to pay for goods or services in a real-world economy transaction has tax consequences that may result in a tax liability. So again, this notice addresses only the U.S. federal tax consequences of the transactions in or transactions that use convertible virtual currencies and the term virtual currencies. So again, this is talking about how cryptocurrencies can be taxed in the United States. Down here, we're going to be looking over commonly asked questions that I'm sure a lot of you guys have, and then I'm going to be reading their answers and then summarizing them so you guys can understand what they're talking about. So, how is virtual currency treated for federal tax purposes? For federal tax purposes, virtual currency is treated as property. General tax principles applicable to property transactions apply to transactions using virtual currencies. So the IRS is considering cryptocurrencies as a possession, as a property. They're not considering them as a currency. Is virtual currency treated as currency for purposes of determining whether a transaction results in foreign currency gain or loss under U.S. federal tax laws? So what this means is, for example, if you have the euro to US dollars, they're not going to convert evenly. So you can't take 100 US dollars and convert it into euros and expect to get 100 euros. You're going to get 100 US dollars, and if you convert it into euros, you're going to get 81 euros. That's how it works. So what they're trying to say is, for example, if you take one Bitcoin that's worth like $15,000 right now and convert it into US dollars, you're not going to get $1 out of the one Bitcoin. You're going to get the actual value of that Bitcoin. So that's a good thing for investors. Must a taxpayer who receives virtual currency as payment for goods or services include in computing gross income the fair market value of the virtual currency? Yes, a taxpayer who receives virtual currency as payment for goods or services must, in computing gross income, include the fair market value of the virtual currency measured in US dollars as of the date that the virtual currency was received. So, if you're a business and you receive cryptocurrencies as a form of payment, you have to mark that off on your taxes. And how you would do it is once you receive the payment, you would mark off the value that you received and the date that you received it at and the amount. So, for example, if you received $100 worth of Bitcoin, you would mark off that you received $100 worth of Bitcoin for your business and on the date that you received it. So if it increases in value, you don't have to pay more. If it increases in value, you pay on what you received. What is the basis of virtual currency received as payment for goods and services? The basis of virtual currency that a taxpayer receives as payment for goods or services is the fair market value of the virtual currency in US dollars as of the date of the receipt. So again, this is talking about what we just looked at. So when you receive a payment for a good or a service, so whether it's company or whatever, you are going to mark off the current value that you received the currency at the date that you received the currency. How is the fair market value of virtual currency determined? For U.S. tax purposes, transactions using virtual currencies must be reported in U.S. dollars. Now that does make sense. Therefore, taxpayers will be required to determine the fair market value of virtual currency in U.S. dollars as of the date of payment or receipt. If a virtual currency is listed on an exchange and the exchange rate is established by market supply and demand, the fair market value of the virtual currency is determined by converting virtual currency into U.S. dollars at the exchange rate in a reasonable manner that is consistently applied. So, this is talking about how you mark off on your taxes of what the cryptocurrency is at. So they gave you an example that if a virtual currency is listed on an exchange and the exchange rate is established by market supply and demand, you can determine it by converting the virtual currency into US dollars at the exchange rate in a reasonable manner. So this is pretty much just saying that you have to convert the currency at the US dollar into the US dollar value. You can't convert it into like a euro and mark it off on your taxes. That wouldn't make sense. You have to convert it into the US dollar form, and you have to mark it off at the current value that the cryptocurrency is at on an exchange. And then it tells you how you can determine that by the exchange rate and the market supply. Does a taxpayer have gain or loss upon an exchange of virtual currency for other property? Yes. If the fair market value of property received in exchange for virtual currency exceeds the taxpayer's adjusted basis of the virtual currency, the taxpayer has taxable gain. The taxpayer has a loss if the fair market value of the property received is less than the adjusted basis of the virtual currency. So this is where investors in cryptocurrencies get screwed over, because first off, you have to pay taxes when you purchase and receive a cryptocurrency. You also have to pay taxes when a cryptocurrency goes up in value and goes down in value. Now, when it goes up and down in value, I understand why you have to pay taxes on that, because if you bought 10 Bitcoin 5 years ago at $10 a Bitcoin, and there you have over $1 million right now, or whatever it is, it makes sense that you have to pay taxes on that. But now you have to pay taxes on every transaction you make. Now, I'll talk about this at the end of this page to sum up everything for you guys. But this is just, I think it's a little too much. I think this is definitely where cryptocurrency investors are kind of going to get screwed over. So, what type of gain or loss does a taxpayer realize on the sale or exchange of virtual currencies? The character of gain or loss generally depends on whether the virtual currency is a capital asset in the hands of the taxpayer. A taxpayer generally realizes capital gain or loss on the sale of the exchange of the virtual currency that is a capital asset in the hands of the taxpayer. So this is talking about how the taxpayer determines if it's an asset or if it's a digital currency that you use for everyday to-day transactions. So you're the one that determines that. Now, for businesses that are like receiving money, that receiving cryptocurrencies as a form of payment, that's not considered an asset because you're receiving money as a form of payment, which is considered a cryptocurrency being used as a payment. Right here, does a taxpayer who mines virtual currency, so this is all for all you miners out there, realize gross income upon receipt of virtual currency resulting for those activities? Yes. When a taxpayer successfully mines virtual currency, the fair market value of the virtual currency as the date of the receipt is includable in gross income. So, if you're out there mining cryptocurrencies, yes, you have to pay taxes on them. Now, I understand why. I mean, you are pretty much like making money off of mining cryptocurrencies. You're earning the cryptocurrencies, but you also have to pay, again, on the gross of that cryptocurrency. So say you mined Vertcoin and you got $5 worth of Vertcoin. You have to tax on that $5, and as it increases in time, you also have to tax on the increase of that cryptocurrency. Is an individual who mines virtual currencies as a trade or business subject to self-employment tax on the income derived from those activities? If a taxpayer's mining of virtual currency constitutes a trade or business, the mining activity is not undertaken by taxpayers as an employee. The net earnings from self-employment resulting from those activities constitute self-employment income that are subject to self-employment tax. So this is talking about how when you're mining cryptocurrencies, it's not considered a business or a trade. It's considered a self-employment tax. So you have to tax on the cryptocurrencies that you're mining for self-employment. Virtual currency received by an independent contractor for performing services constitutes self-employment income. Yes, generally self-employment income includes all gross income derived by an individual from any trade or business carried by the individual as other than an employee. Consequently, the fair market value of the virtual currency received for services performed by an independent contractor, measured in US dollars as the date of the receipt, constitutes self-employment income and is subject to self-employment tax. So, again, if you're a contractor out there, say for example, I go and paint a house, and I'm getting paid $1,000, but the woman that I painted the house for wants to pay me in Bitcoin. If I take that Bitcoin, I have to tax that Bitcoin for receiving it, as well as if it increases in value, I have to tax on the increase in value. So the rest of these questions are really based off of businesses, so I'm not going to read over them just simply because I'm sure there are some of you guys out there that use cryptocurrencies as a form of payment, but I will be leaving the link to this PDF in the description, so you can go check it out, do your research if you own a business. So this last section I want to read to you guys, this is talking about the penalties you can receive if you do not pay your taxes for cryptocurrencies. So will taxpayers be subject to penalties for having treated a virtual currency transaction in a manner that is inconsistent with this notice prior to March 25th, 2014? Taxpayers may be subject to penalties for failure to comply with tax laws. For example, underpayments attributable to virtual currency transactions may be subject to penalties. They also tell you to read Section 6662 for the penalties that you can receive, as well as 6721 and 6722. I'm not going to read over them. That's something you guys can do on your own time, because you definitely should be doing your own research on this as well as watching this video. So that really is it summed up for you guys. To sum it up in simple terms of what we are being taxed on in cryptocurrencies. So whatever it is, whether you're sending from a wallet, to an exchange, from an exchange, to when you're converting one cryptocurrency to the other, whatever it is, whenever you make a transaction between two cryptocurrencies, it's a taxable event, which I think is absolutely ridiculous. I think that's not necessary at all. And also, this is the speculation people are really having. Can the IRS really track all this stuff? Can the IRS track when you convert one cryptocurrency to the other on an exchange? Can they track when you send a cryptocurrency to a wallet and from a wallet? How is that a taxable event? But somehow it is. It's considered a taxable event. So again, for example, if I convert Bitcoin to Litecoin on the Binance exchange, I have to pay for selling Bitcoin as well as receiving Litecoin. That's two taxable events. If I send Bitcoin to a wallet, I have to pay to send the wallet and as well as receiving on the wallet. That's two taxable events. Anything, whatever it is, when you're sending a cryptocurrency from to somewhere, you have to pay taxes on it. Now, if you're sending Bitcoin to someone else, you would obviously only pay for the sending side, and then they would pay for the receiving side. But you have to pay taxes on both sending and receiving if you're converting one cryptocurrency to the other on an exchange, as well as if you're sending a cryptocurrency to and from wallets, you have to pay that. It's considered a taxable event because it's considered a property. So that's currently where we're at right now. I think it's a little ridiculous personally that they're making you pay for every single process you make when it comes to cryptocurrencies. I think that's a little too much, but that's currently where we're at right now. Now, if you made it this far into the video, thank you, I appreciate you. And now it's time to talk about the easy and hassle-free way to keep track of all your cryptocurrencies, all your trading, and all your gains and losses. So before I talk about this website, no, I am not sponsored by them. I am not paid by them. I am simply talking about them because I really think they could benefit all of us in the long run when it comes to keeping track of our cryptocurrencies and the IRS. Cointracking.info. Now, this website is awesome. They have a lot to offer as well. So they have personalized analysis, interactive charts for trades and coins, calculations of key indicators, profit, loss, coin value, and balances, as well as realized and unrealized values. So it's an easy way to keep track of everything on cryptocurrencies in one simple platform. So whether it's exchanges, wallets, anything, you can keep track of it on this website. So they also have trade importers, so you can easily import your CSV and API keys onto this platform from over 40 exchanges. You can export in Excel, PDF, CSV, XML, and JSON files, so you can easily export your information and walks down to the tax man, hand them your files, and you're done, ready to go. And you can also just keep them in safe storage for yourself. Direct synchronization to the blockchain, so they have easy access to the current value of cryptocurrencies and all that kind of stuff, the current charts, all that. Trades, list of all trades and fees. So if you do import your CSV and API keys, they do not have access to your actual exchange. They just have access to your trades and your history and your fees, which is a great feature. List of all trades and fees, grouping by exchange, interactive search, and comment functions. So again, this is the thing you need for the IRS. You need to have access to all your trades, all your history, so you can see where you owe fees and how much you owe. Coin charts and analyzes. History charts of over 5,000 coins, always the latest prices of all coins, top coins by trades and volumes, experimental Bitcoin forecasts. So they talk about, again, they have all the cryptocurrencies on here that they've ever had. Always the latest prices, and they also have experimental Bitcoin forecasts, so they talk about Bitcoin and where the price movement could possibly be going. Tax declaration, capital gains report, FIFO, LIFO, HIPPO, and HIFO and LOFO calculations, prepared for accountants and tax offices. So that's what I was talking about earlier. This is the thing you need for accountants and tax offices. Easily print out all your trades, all your history of cryptocurrencies, whether it's from a wallet, an exchange, anywhere. You can import it onto this platform, and the great thing is they don't have access to your exchanges and your wallets. So you're just importing the information on the trades, the trading history, and the cryptocurrencies on those exchanges, but you're not actually giving them access to your accounts. So they're also very secure. They're SSL certified and encrypted, and they have no access to your exchanges. So that's all they offer. Again, this is the perfect thing you need to easily implement all your trades and history onto one platform where you can easily print it out, walk down to the tax man, hand it to him, and you're done. Because currently, if you were not to use this website, you'd have to print out all your history on each exchange, each wallet, walk down to the tax man, hand it to him, and then he would have to sit down with you, calculate every single tax or every single trade and transaction you've made, and calculate all the taxes that are due on those trades. So again, this is the best and easiest way to get stuff done very fast. So that is cointracking.info. It's a great way to keep everything in one place, very secure and awesome. I highly suggest going to check this website out. I will be leaving a link for the website in the description below. It is a referral link, so if you use that link, it won't cost you anything, but you will be supporting the channel, but it's not necessary at all. That's going to be the video for today, guys. I hope you enjoyed this one. Please leave any comments in the description below, whether it's a question or your personal opinion. There's no bias on this channel. That's it for today, guys. I hope you enjoyed this one, and I'll catch you in the next one. Peace!